Hey my YouTube friends, welcome back. Today in this video, we're going to talk about Affirm. But before talking about Affirm, I'd like to quickly recap what I did during the past few months and what happened to Rivian stock, which was in my trading account. In my last video, I was talking about Rivian stock was so undervalued at that time. It was trading around $10 and I'll trade it as low as like $8-ish. I've been constantly buying the Rivian stock at the price of like 12, at the price of 11, around the price of 8.43, which were insanely low at the standard of if we look at that today. And at one time, I got as much as 5,000 shares of Rivian in this trading account. Of course, I still have some more, even more in my like long-term investment account. I was very happy about the holdings, the shares I got about this stock, and I hold like a firm belief that Rivian stock was so underrated at the price of 8 or 10 or 12 or 13. And there were some amazing things happened that Volkswagen had invested in as much as $5 billion into Rivian, and they're going to like have this joint effort to further develop their EVs. This is especially a fantastic news for Rivian stock and all the Rivian investors and traders. And at one time, after this news, this massive investment news from Volkswagen came out, Rivian stock has like jumped more than 70% over one day. I was shocked because back then I was wondering why the stock like has jumped up so much that it bumped the value of this trading account, the portfolio, which was really amazing. And after some like market adjustment, I guess investors are adjusting their positions and reevaluate the stock. And now a few weeks ago, 2 weeks ago, it kind of settled at the range of 16 to 18. And I've sold all my shares at $18.16, as you can see in this record here. Well, it's not saying I'm giving up on Rivian or I don't like Rivian stock or Rivian's company at all. On the contrary, I like it very much. I like the product. I like their pickup trucks, their SUVs, and their future plan of the R2 and R3. I like all of them. It's just I think this is a temporary high point at $18, more than $18. Of course, it can go beyond 18 to like 20, 25. That's totally possible. It's just at this price point, I feel there are some more opportunities elsewhere. So I'll just like temporarily sell my Rivian holdings and looking for somewhere else. Okay, guys, let's first take a look at the stock trending of Affirm holdings in the past year. By the end of 2023, that was the near-term highest point of Affirm. It was traded as high as $51. It's gone up from all the way from like 13, 15 in 2023 all the way to 50, and that was a really cool rally for this stock, right? But in this year, if you look at the year-to-date trading trend of this stock, it's really not going hot. It's down by 45.26% as of today. It's gone down from almost like $50 to now just 26.89, like below $30 in the recent week. And there are a couple of reasons for Affirm not trading as good as last year, and we're going to talk about in this video. And we're also going to explore if the potential interest rate cuts is going to benefit Affirm stock, and if ever it's going to go back to 50 and beyond in the near or midterm. We do follow the trend and the overall sentiment of the market, but we do zoom the timeline from like day trading to a relatively long time, like 1 month, 3 months, even 6 months. That is the goal of this channel, and that is the goal of my trading portfolio here. I share with you guys in each of my video, and I share with you guys with full transparency. And hopefully this is a better investment plus trade that gets higher return than just like say invest in SP 500 and NASDAQ 100, those index funds. And if you want the same journey with me, and if you want to keep an eye on this trading portfolio I have here, please like this video and subscribe to the channel. Okay, now let's go back and talk about Affirm. And the first thing we need to figure out is what is Affirm's business model? How does Affirm make money? If you don't believe its business model is healthy or it's promising, why would we even like trade the stock? After some investigation, the main business of Affirm is that it's point of sale loans. So what does that mean? Affirm partners with over 11,000 merchants across the United States and North America. When customers shop online or in store, they can choose Affirm as a paying method or payment option. Affirm reviews their application, consider their FICO score, I guess it's a credit score, and spending data, and offers an annual percentage rate. If approved, customers receive a loan facility for amounts up to 17,500, and with payment plans spanning from 6 all the way to 36 months. So Affirm settles the account directly with merchants, ensuring transparency and no hidden fees. So in short, Affirm's business model is like a short-term to long-term point-of-sale loans company. Some of the loans are pretty customer-friendly, that they have really low APRs, even in today with a super high federal interest rate. But some of the loans, of course, they have their interest rate, especially considering the customer's credit record and other factors. Affirm earns the money from that. And ladies and gentlemen, we have some good news. We have some fantastic news for Affirm. And this data is freshly came out earlier today, that the cooling US inflation bolsters September rate cut hopes. So today we have the latest, the PCE inflation data. It's from June, and here are some key points of this PCE data. This data is very important for Federal Reserve to make interest rate cuts or hikes decisions. And the June data is really good and really giving hopes for investors for Federal Reserve to cut their interest rate in September and later this year. So June personal consumption expenditures price index up by 0.1%. That's aligned with the analyst's expectation. And PCE inflation increases by 2.5% year over year. That's very close to Federal Reserve's target of 2% year over year. And core PCE price index gains 0.2%, up only 2.6% year on year. And consumer spending climbs 0.3%, income rises 0.2%. And from this news, we can see that U.S. prices increased moderately in June as the declining cost of goods tempered a rise in the cost of services, underscoring an improving inflation environment that could position the Federal Reserve to begin cutting interest rates in September. And this is fantastic because a lot of investors and the market is waiting for Federal Reserve to finally start to consider interest rate cuts. Of course, the market has already, in some circumstances, priced in some of the interest rate cuts expectations. However, we're looking for some more stocks that can potentially benefit more from the interest rate cuts. And these stocks I'm looking at are Affirm, Redfin, and Tesla. So Redfin we know is the fourth largest U.S. online real estate website or online real estate company. And real estate is one of the most sensitive area to interest rates. And of course, the interest rate cuts can potentially benefit Redfin even more than the broader market. And also Tesla. Tesla is selling cars as their main business. I would rather take the chance when it has an even lower stock price than it is right now, trading at the low $200. And that leaves us, ladies and gentlemen, Affirm stock. And Affirm is the business model, as we just described, is very sensitive to interest rate. And I think it'll benefit more compared with the general market to the potential interest rate cut. So that's the plan for my midterm trading portfolio as I share with you guys here. Okay, now let's dive into the quarterly financial results of Affirm. Affirm's financial results are issued by fiscal year and fiscal quarters. As you can see, fiscal quarter Q3 2024, that's actually the calendar year from January 2024 to March 2024. They have yet to release its Q4 fiscal year 2024 earnings report. It's coming soon, but it's not here yet. So in this report, this is the latest report, and we're going to focus on a few things. This chart, okay, these are the two key values Affirm or this industry used to measure the business performance. One is the GMV and one is AOV. So AOV is the average order value, each order, what's the average value of each order. If it goes higher or if it keeps stable, that's a good sign. And the GMV is the total dollar of all transactions on Affirm platform during that period. So we can see that GMV, it was declining from Q4 2023 calendar year. But if we compare the year-over-year results, it has a 36% growth. But I think most importantly, consumer spending has this seasonal pattern. typically consumers spend more in the like last quarter of a calendar year because of, like the holiday season and so on and so forth. Good. And we have Affirm card active consumers growing quarter over quarter. This is a good trend. This growth rate is a good trend. And the next slides, partnership across a wide range of categories, general merchandise, fashion, beauty, travel, ticketing, electronics, home, lifestyle, equipment, auto, sporting goods, and outdoors, others. Okay, these are just the like categorized the spendings from customers, from consumers on each of the category. And this is the active consumers. Okay, we still have this very good growing trend, and the transactions per active consumer is increasing quarter over quarter, which is good. While the returnly active consumer percentage, it seems it's dropping, and this is kind of like a warning sign or a red flag. Anything else looks good, like steadily growth. And if we compare the year over year, it's like 27% transaction per active consumer growth, which is good. And the operating income, we can see like it's narrowing its operating loss. And if consider the adjusted operating income, it's actually growing from the negative territory to the positive numbers, which are good. People may concern the growing is slowing down, and I think that's one of the biggest reasons why the stock price is declining this year. Well, I do see like steady growth, quality over quarter. I'm not too worried about that. The next very important thing we're going to take a look is the outlook, the business outlook. These growth rates are not high. These are just like 3%, maybe even less, 2%, and these are not high enough as well. So if you look at the revenue, if I look at the revenue chart, in the last 2 years, the Q3 to Q4 revenue growth was like more than 10% for 2023. So the quality growth rate is definitely slowing down, and I guess that's some like investors and traders are concerning about because the outlook is. However, my thought about a firm being benefited from the interest rate cuts is still stands, especially considering the stock price has been dropped by like 42 or 35% from the beginning of this year to this point. So in the next 3 to 6 months, I still have like high hope that Affirm can go back to much higher stock price than it is right now. Okay, finally, let's take a look at my stock holdings in my current portfolio one more time. So now I have 2,300 Affirm shares that worth around $62,000. That's 75% of my 88,000 whole portfolio value. I have some AMD stocks and I have some Nvidia stocks. I got the Nvidia stock because like the market sell-off in the past week. I'll talk about AMD in my next video, but this video is about Affirm, and I think Affirm is going to benefit more from the interest rate cuts from Federal Reserve in the next 3 months. Okay, if you want to take the trading journey with me, and if you want to keep an eye on the stocks I trade and the analysis I have in the videos, please consider to like this one and subscribe to the channel. I'll see you in the next one.